Welcome, Satru and Tuan. Good to have you guys. We're talking about the turkey trot and a great way to, relieve your shame of getting fat. And I think I'm going to make my own turkey trot this year. I've just decided. So, yeah, I hope everybody has some good plans for it. Anybody doing anything exciting? Anybody going out of town? Doing anything fun? I am not doing a single thing. I know we're gonna do the turkey. I think we might even deep fry it. Has anyone ever had deep fried Thanksgiving turkey? I'll tell you what, you need to do two turkey trots that day. I'll tell you what. So if you thought Thanksgiving Day was already a lot of carbs and whatnot, yeah, deep fried, I'm telling you, it is the way to go. We fry every year. I love that, Satra. That's delightful. Love it. I my dearest mother asked if she could get me anything at Costco, and I was good, but she needed to get stuff for Thanksgiving, and I said you better go early because things are getting bought up. And I heard that she came back and she had mentioned that toilet paper and paper towels are just they had a huge delivery, and within 2 hours the reps said that they were gone, like completely sold out. And I was like, oh my gosh, I can't believe this is happening again. And I remember this meme that I found, and I had to share this with you guys. So it's probably one of my favorite ones, close to the one that I shared with you guys last week. Laughing at people fighting over toilet paper, realizing you're out of toilet paper. I swear that was probably my mother's face today. So just thought you guys might enjoy that. So yeah, I hope you guys do have fun plans. I do have to say that I'm bummed that there won't be any traveling this year for Thanksgiving, because last year we went to our friends in Sonoma. My folks, my family, my brother, we all went out to Sonoma. And I mean, I'm typically in the Bay a lot of the time anyways, but I happened to be in Idaho. So we drove from, or maybe I was in the Bay. Anyways, they drove from Idaho to Sonoma, and it was a great Thanksgiving. And we were going to do it again, but everything got just all messed up with the got a quarantine for 2 weeks and all that. But I don't think it should stifle any kind of serious plans. Still like to go out. My parents and everything are staying here, so I won't go anywhere. But I hope you guys plan on doing something good. So I'm gonna get this cranking. People join as they come. So welcome, guys. I have a few things on the agenda today that are definitely of importance. And then if you guys have anything that's on your radar, I would love it if you would share it. I'd definitely take a look at it for you. So first off, let's go over just the quick agenda for today. Get the VIX real quick. Whoa. All right. First things first, let's talk about this week. So Thanksgiving Thursday. We normally meet on Thursday, right? So Thanksgiving. And in the US, right? Since we focus on all markets. There will be practically no activity in the stock market. So can happen, but highly, highly, highly unlikely. That being said, since there's not a lot going on, well, obviously the markets are closed on Thursday, so we won't meet. So, this will probably be the only session this week, most likely. And the markets will probably be slow on Friday. So I thought about doing one on Friday instead of Thursday, but they'll probably be slow, and everybody should go enjoy their Thanksgiving weekend anyways. So we will still be active in the chat looking for activities, but this will probably be most likely be our only session this week. Stock market's slow, but currencies or Forex will be active. You better believe. I cannot tell you how many times, I don't know how many Thanksgivings, 12, 13, 14, I don't know, I got to check my calendar, but I don't know how many Thanksgivings I've done where the week of it, the currency markets go crazy. So even though we are on holiday, the whole rest of the world is not. So we may dominate the markets in stocks, but in currencies, we do not. So there's going to be activities. So that is definitely stuff from the past. So yeah, let's talk about the markets in general. Okay, so we have a lot of things that's kind of moving us in a sideways upwards trajectory, right? But the biggest things that we need to still focus on, and what's pretty much moving the markets altogether, is one, vaccines, right? So we have three major companies doing it. One of them big one is Pfizer, Moderna, and this other one called AstraZeneca. I think it's AstraZeneca. Anyways, these guys are projecting like 90 plus success rates in debilitating the increase in spreading and creating an immunity to it. So there's lots of good things going on here. So that's one. The other one is stimulus. Now, I don't know if you guys have been paying attention to the stimulus package talks, but there hasn't been any new updates. So the first one was we were going to do 3 trillion, big old 3T. Now they're talking about 500 billion. And Capitol Hill is just debating. Everybody, there's heavy talks between both parties on which way to do it, which way to go, how to proceed. It's possible there's a high probability that all the talks get held up and nothing gets passed until Biden takes over. So that being said, if a lot of people are projecting that the stimulus is going to take the market off, you might not see anything happen until next year. It's possible. The other one was the coronavirus. Cases are way up. I was just looking just the other day. Cases are up on per 100,000 people, 52 cases per 100,000 people. So it's just rising at a pretty alarming rate right now. So that's got everybody scared. We were talking about Turkey Day and a lot of travel expectations, and they're encouraging people to be cautious and to not travel. And I don't think that's going to stop anybody. And the funniest thing was I was looking at the map, and the map goes from like a light green color, which means you're a low case state, to dark blue, which means you're a heavy offender, high case state. And all the coastal cities are lower cases. All the big offenders are the entire West to Midwest states. So like everything in the middle. So that's kind of uplifting in a way, because we know that the majority of the population sits on the coast. So that means that in general, major populated areas are not ticking up huge, but still we're still rising, and the world in general is rising. So, that's just a factor that we have to keep in play and keep in mind. Let's look at the VIX here. So the volatility index, we have been sitting around this low area. There you go. We've been sitting around this low area for quite a while, and it doesn't look like we're going to have too much movement anytime this week. But that being said, let's go back here and draw our support level. We need to pretty much start breaking below these two areas right there. Here we go. We need to get into this whole area in order for us to know that it is time for the market to rally. That's what that means to me, this whole area right here. So until we get down into this particular zone of lower volatility, it just means that we don't know what's going to happen, right? So we're keeping our eye on this. We want to see volatility break. We want to see volatility break lower or higher, just to give us a direction, right? So let's take a look at the S&P. Get my list out here. Okay, so same situation, right? Not a lot's changed. We still have this huge widening pattern. We did sell off a little bit right here, right? And we're still trading right back below that major resistance level. So what does that mean? Where are we going forward? Something that was pointed out to me, and I actually had. I remember this, but we had talked about this last week, and I'm not sure if you guys knew this, but Amazon, AZN, that's right. Amazon, Google, Facebook, Microsoft, FT, Apple, of course, and then Netflix, I think, was a huge one on there. NFLX, and then Tesla, but it's not up there yet. FANG, right? Yes, Twan, yes, correct. I mean, they call it FANG, but there's more to it. Anyways, the FANG, if you were not familiar with this, and Twan seems to have picked up on it, these companies right here, and Tesla will be joining them. They're not in. They're being introduced to the S&P, but I don't think it's happening until December. These bad boys right here make up 25% of the S&P. Okay, so that's a huge number for the S&P. Now remember, the S&P 500 is made up of the 500 most profitable companies in the world, right? So these guys make up 25% of the 500 companies in the S&P 500. So what is the biggest thing that we can look at here? What stands out to you guys about these companies? They all have what in common? Tech. That's right. Thank you, Twan. They all have tech in common. What's been happening with tech lately? Nothing is happening with tech. Tech has completely stalled out. Why is it stalled out? Well, I'll give you a little hint. Greatest bullish rally of any sector's history, right? It's overbought. So this is a massive movement. Here's the other reason, and this is, a fundamental aspect. We always got to think about technicals and fundamentals. The fundamental aspect of why tech is flattening, stalling out a little bit is they actually don't like the prospect of us getting a vaccine and going back to normal life, because what does normal life mean for tech? Not good, right? What was a stock that I was following for? I think it was you, Katie. It was Peloton. What is Peloton's ticker symbol? Peloton. Somebody help me out. Does anybody know Peloton's ticker symbol? PLN. Is that it? No, this is Walter. PTON. Yes. Thanks, Tony. Here's a great example of a company that has benefited incredibly from the famous COVID-19. How do you think this is going to do when we go back to normal? And we this is stock we're going to look at probably later. I don't think it's going to do very well at all. I am short-term bearish tech stocks. So this is flattening out, not doing much of anything. Let's go back to the S&P. We just talked about how these make up 25% of the S&P. So if they're all in tech, let's make a couple notations here. Amazon is going to do well pretty much regardless of what's going on. Microsoft, same thing. These guys are so heavily saturated into general life that not much is going to happen. Of course, Apple is a behemoth, right? But they're not a conglomerate like Microsoft and Amazon, where they just do so many different services. Not as big, anyways. But even though these guys do so many different things, Google, Facebook, they're all pretty much centered on the fact of, digital reality, right? So if any of these guys take a slip, we are going to see this take a slip here, right? Tech, it may struggle in the near-term future. When these guys make waves, it makes waves for this. So, unless these guys start posting huge earnings, huge profits, big announcements, things like that, you can pretty much guarantee that 25% of the S&P 500 is not going to make big waves. It could make big waves going down, though. That's for sure. Any kind of disappointing news whatsoever could see some of this action right here. Lots of profit taking is also happening. Tech had blackout dates for vested RSU. Some come due in December, as well as you maybe see more sell-off. Right. RSUs are definitely a pivotal factor in when you're looking at stocks. But with these companies, we would have to see millions of shares being sold off. And even though they're coming up to date, for example, looking at Apple, we have 127 million shares traded in one day, right? So RSUs are important, but I'm more so thinking about what, yes, there's a lot of profit taking coming off the top. Also, they're not happy about what's going on. So who is happy about what's going on? Airlines, right? We talked about this a lot. I talked about a breakout above this 42 area. We had this huge breakout, sold off, came back to this support area, and has bounced off. You know, I had suggested starting to pick up some shares, start easing into this. So I hope everybody was able to do that. You know, we're up a decent amount from that area. Let's see here. We're up gosh, 12%. That's great. You know, so if you were to just pick up some shares, you're up 12%. Now I'm still looking at optional plays on this, and I think we're going to have one very, very soon. The spreads on when I was looking at these, they were horrible because of this massive rally right here. They were no good. So now that they probably started to level off a little bit, which I've looked at and they have, now we've got some opportunities to do some bull put spreads. Let's take a look at Delta. And you just got the same scenario. This one looks a little bit better because it's had a solid opportunity to try and break out of this resistance and hovered around it. It's still kind of there. So this one has a little bit more room to run and a very clear target here. I've talked about looking for gaps in the past, and we had a very, very evident gap here. In stocks, gaps don't always get filled. Not always, but they are areas to consider price wanting to maybe re-represent in a sell-off situation. So let me be clear about this. What is a good example? You know, we use Peloton again. PT, what was it again? PTO, that's right. So there's not any huge gaps here per se. Oh, sorry, what am I saying? What is a good one? Zoom. Zoom is a great one. Okay. Zoom is my favorite one. Here's this massive gap, right? And it almost retraces all of it, but it still leaves off this a little piece of the pie right there. So this particular situation here may not necessarily come back all the way because it was in a bullish scenario, right? Whereas Delta created a gap in a bearish scenario. So why is that important? We don't really want companies to sell off, obviously, right? But when they do sell off and they make gaps, you better believe that they're going to fill them because Delta is a very, very profitable company. It's done very well in its history. So this is our short-term target of around 42, 43, right? So this could be a great opportunity to do a bull put spread on this one, or even just buy some calls. The only part about buying calls that we have to keep in mind is time. You know, we've broken above this resistance area right here. How much time do you think it's going to take for this to come back up? Are we getting the vaccine right now? Do you guys see people traveling like a whole heck of a lot? The beginning of Q1 2021. You know, these are questions that you have to think about. What's my bias? How do I feel about overall traveling, overall hospitality, all the entertainment stocks, all the sectors that got demolished? How do I feel about them returning based off of the fundamental economics of our economy, right? What's going to return? So those are things you have to think about when you're buying a call. But bull put spreads, I like these a little bit more because we have room to be wrong. I like having high probability situations that enable me to either own the stock or make some money and then own the stock. So that's one we're looking there. What's another one that will profit maybe while tech is not doing that great? Energy sector. That's right. That's going to be a big one. Energy sector, retail stocks. So the energy sector here, excuse me. Excuse me. So the energy sector here, we actually had a head and shoulders pattern right here, but it was in the wrong direction. So now we have this huge double bottom, massive double bottom. Okay. So when I say double bottom, thinking about our charts again that we may have looked at, right? So bottomed out here, took its time to try and recover, realized that that's not going to happen anytime soon, created another bottom, and it's on the rise again. I had actually suggested a couple weeks back of looking at energy and saying this could be a great area to start buying, right? I hope you guys were able to pick up a few shares here and there on this one. There was no optionable opportunities on this yet, but again, something to just have in your portfolio. So we're on the rise again. We have a couple things looking out here, right? We have this breakout doing well so far. We don't have any resistance levels until pretty much up at this area right here around 47. So we have a lot of room for this thing to start growing. We're above our 50 moving average, right? But this is kind of where we come into that uncertainty channel between our 200 and our 50 moving average. So this could take some time to get back to this area, especially until we're waiting for things to kind of clean up. This would be another thing to think about. Do I want to target this and just buy some calls? Or do I want to just buy some shares? Or do I want to try a variation strategy? So the answer is yes, right? We want to do all those things, but we don't want to put ourselves in a position where we have to be right. And this could take some time. So anytime I'm thinking about just buying a call, just a long call, I have to think, well, what's the volume on this? How fast does this thing move? Is there a lot of movement in this? I have to think about all these questions because they're extremely important. What's the delta on it? You know, is the delta going to be in the money at a certain price percentage wise? If you're not familiar with the term delta is, it's part of the Greeks, and we will be talking about that. So all these questions I have to ask, because if you're, depending on what the premium is, there's a break-even price, right? So once I know what that break-even price is, let's just say I bought a call with a 40 strike, and was looking for this to run up to 45. Maybe that was my profit target, something like that. Nothing too crazy. So if my premium makes my break-even price say at 42, that means that this guy has to go. Where's my measure here? This guy has to go from currently 39.50 to 42.50. That's an 8.5% hike, right? That's just to break even. That means you're not losing any money, right? And then to get to my target, which is up here around 47, that's 20%. So we can look at these targets and we can say, where do I really believe in this? And if the answer is yes, if I have a long-term fundamental bias on this, then I might want to look at some diagonal spreads, right? That's the one that we talked about a few weeks back, where our calendar spread is way out there, maybe like a year from now. So remember, when we're looking at options, we're typically looking at 30 to 50 days out. Go ahead and bring it up here. We're looking at 30 to 50 days out, right? So if today is the 23rd. Here's the first optionable contract I might take a look at. Here's another one, right? Well, diagonal spread, a long diagonal spread would be out to maybe here, a year from now, right? So that might be something I would look at, because then I'm feeling like, okay, I'm long-term bullish on this, but it's going to cost us. Anyways, it's a strategy that we can implement. Gush, GE, Macy's. Yep, we're going to bring up Macy's. Can you confirm on Gush? I believe it's about to do a golden cross. Considering consolidating my stock to this ETF. Okay, Tuan, let's take a look here. I don't think I've brought up Gush before. Oh, it's the 2 times. Okay. General Motors. Yeah, I was going to talk a little bit about that. That's, Chevy and all that. They are just having a heyday. So is this the ETF that you're looking at here, Tuan? Let me know, because I'm not getting a whole lot of anything right now that I can really confirm. But let's take a look at retail. So let's pull up Macy's first. Macy's is on a tear. I actually went into a one of the retail outlet stores. I don't know, not too long ago. It was empty, and yet the store is killing it. Online sales, so they're doing really well to mitigate this disaster by just driving tons and tons of sales in their through their online platform, right? And look, we're already at this resistance area. Whether or not we bust through it, I don't know, but we have a lot of things to look at here. We have now closed above our 200 moving average. That is extremely bullish. We broke out of a somewhat channel wedge pattern here. There's a lot of good things to look at on this particular one. We've come across this movement here. This is something that I pulled up a couple weeks back, and I said to keep your eye on these retail stocks. They've done extremely well. This wasn't a trade that we did in the group, but it was something that I suggested that you guys keep an eye on. I hope you were able to at least get in on adding some shares, some positions to your portfolio. Now that we're getting to this resistance level, it wouldn't be a terrible idea to take some off the top. If you're holding Macy's, it wouldn't be a terrible idea to take some off the top, because even if it busts through, that's a lot of that's a big rally for a retail store that I don't know what their secret is, but the fundamental problems of our country and our globe, our world, is still there. So keep that in mind. I want to see some consolidation, and then I think we could see some potential bull put spreads because if we bounce off of this and kind of do one of these little maneuvers here, right, and then kind of consolidate, I will expect it to hold above here, and then we can start looking for maybe buying selling a $8 strike and buying a $7.50 strike, something like that. Anyways, let's go ahead and check out. Oh, what was it? What was the other retail? It was, oh, right, Kohl's. Kohl's was an active trade that I talked to everybody about. They had earnings and they did okay. Their earnings release was good. Obviously, you can see that right here. And they are still just eating up this rally that they pushed through right here. We bought what was it? We bought the 2450 put, and we sold the 2550 put. Okay. We are up 90% or $351 here just on NI contracts. We only risked $1,000 on this trade. It's doing incredibly well. It was a great trade. It's not going to do everything that I wanted to do. What I really wanted this to do was do this little doodad here. This is really the overall goal when you're looking when you're watching when you're looking for a bull put spread. You really just wanted to do this. That's really what the goal is here, because then you collect your premium, it expires worthless, and you can go ahead and pick up the shares. And then if we're still confident that this thing is going to stay at least above or stay at a certain price, go below, we can start selling some calls, right? So that was what I was hoping for, to collect a premium and then buy some shares. It didn't do that, but you better believe I'm extremely happy about a 90% a 90% cleanup on this trade. Feeling very good about that one. Tuan, looks like your price sidebar was up to 2K. Price is trading around. Oh, let's go back to that real quick. Gosh. Oh, yeah. Look at that. Hello. Oh, yeah. Thank you. Thank you, sir. Did not even notice that. Look at how much adjustments you got to do for that. What a sell-off, huh? There's a gap. Hey, guys, what did I talk about? Gaps? There's a gap. Oh, yeah. So not saying that that's going to get filled anytime soon, but it definitely could, and it's definitely a target to look for. So we kind of actually have a head and shoulders pattern here. It's just in the wrong direction, but it's still a pattern. So I think we talked about this. We talked about this in the last session. So we've got our shoulder, we've got our head, we've got our shoulder, right? So we could even draw it out with the actual. There you are. We can draw it out here. Head, shoulders, knees and toes, knees and toes. Okay. So okay. Let's see here. This little spike above this short-term resistance right here looks really good in near-term bullishness, but I see short-term resistance right here. Let's see, considering consolidating my stock to this ETF. Yeah. I can see some resistance right here, but we did have a solid breakout right there. We're running up real well. We are above our 50 moving average. This huge gap is gonna completely skew our moving averages. Look at the MACD right now. It can't even make heads or tails of this, right? So the indicators are going to be worthless on this. So we're going to have to use good old technical analysis on it. I like this. I like this. And in a technical aspect, I like this. If this is something that you view as one of your main ways to look at energy sector, I like this. If this is something that you really want to be loading up on to quantify your portfolio of energy, this looks good technically, right? I like this. I can see this resistance being an area of consolidation, maybe. But I see all this, and what do I see, guys? We talked about this last week. We've got some bull flags. There's one. All right, here's another. Now, I said that, we're looking for things to do something more like this, but they come in all different forms, all different, playouts. These are definitely bull flags, and they're going very, very well. Look at this. This one is playing out perfectly. So this would be a bullish confirmation. It would have been good to get in around 32, but that's okay. I would still consider adding to this because technically we should have at least a run up of it at least. Let's see, take a look from here to there. 21%. Measure tape. Yeah, this should go at least to our resistance area. So this would be a good area to start picking up some shares. And then it could get stuck around here, but yeah, wouldn't be a bad area. The 220 EMA just crossed the 200 EMA today. Okay, that's pretty big. That's just for those that aren't familiar with what that is. On the systems, one of the ones that I've talked about, that's up right now, I'm going to have to change over because it's too hard to look at this. Let's go to ExxonMobil. This is a 50 moving average and a 200 moving average, what Tuan was talking about there, right? So it's already crossed. A 20 moving average is much closer than this one, right? So basically what he's talking about is they've crossed. When you get a cross, like back over here, that's a big indicator of a change of trend, okay? So we had a huge change of trend here. So Gush is changing trend now. That's a huge indicator. But just looking at the technicals, we can see that we have some really good opportunities there. What were the other ones that I looked at? It was, Bank of America. We talked a lot about this. The spreads haven't changed too much, but I don't even care anymore. I'm going to make this a live trade in the group. So I was looking at a bull put spread. The spreads were not ideally what we would like. However, this is just looking really good. I really like the idea of owning some bank stocks. I like Bank of America. It's got a lot of potential opportunity. You can also see that this is widespread. Wells Fargo does not perform well in terms of banking stocks, and we have a breakout right here, right? Oh my gosh, is that true? Oh man, that would be hilarious. Okay, but this is very bullish, you guys, because a breakout of this wedge right here is just a huge pivotal aspect that banking stocks are starting to take a rebound, right? As long as we can stay above this resistance area right here, I'm bullish banking stocks. I don't necessarily want to buy Wells Fargo because if you're going to buy a banking stock, you don't need to. If you want to own banking stocks, just pick one. Bank of America, I like a little bit better. JP Morgan's good too. It's just a little expensive. JPM, of course. It's just a little expensive, but it does have a huge opportunity here. Support right here, becoming resistance. Okay, support becoming resistance right here, and support there, right? So here's our support area, tried to hold up, busted through. Here's our resistance area that was support, now resistance. It's holding up right there. I can see this busting through. This could be a good opportunity. This one is definitely something that I don't know that I would necessarily want to exercise and assign, meaning own the shares on a bull put spread. But I definitely would like to get paid. I would like to get paid on this one. So it's a little expensive. Let's take a look on it really quick just to see how much it costs. JPM. Let's take a look at just the December 24th. It's not terrible. The spreads are good. The spreads are good. Let's actually, you know what? We might actually do a trade on this one. We'll see what happens at this resistance area. We might want to get in before, but we don't want to make any movements this week because it's just going to be dull. And we might want to wait until the following week to see if we get a bounce off of this. Okay. So the direction on this one is we definitely have a trade coming up here. We want to see if this can hold here. And if it can, start to look at some strike prices maybe down here. We definitely want to see it hold below this area, right? Let's see here. Totally biased, but if Wells Fargo removes asset cap, that's a catalyst. Wells Fargo is at its 5-year low. If time is on your side, load up. Right. Like I said, though, pick one and go with it. In terms of optionable stocks, guys, I think Bank of America is going to be your better bet. But if you want to own some Wells Fargo and get it at a discount, definitely a move there as well, right? Last thing that I wanted to talk about before we jump over to some currencies, and then we'll wrap it up. I talked about banks, airlines. I wanted to talk about coals. That was a great trade. I brought up David. You asked me to look at a marijuana stock, and I think it was ACB. Thank you. Okay. It has done absolutely nothing, and I'm sure you've been paying attention to that. Let's take a look over here and see if anything's changed. Okay, we have decent volume on this, but take a look at this. At the lower levels here, nope. At the lower levels here, right around an area I might do a bull put spread, we have huge gaps in our spread, right? So what is that? That's a 25.30 minus 25.30, right? That's pretty big. Not to say that it's no good. It's just big, right? So the bid ask price is fine, so that's good. So we may have an opportunity on this one, and I kind of like it. And the reason I like it is because of this. Someone please tell me why this is a good thing for a spread trade, for a vertical spread. Can somebody tell me why that is? This right here is consolidation. Consolidation is good on any time we're doing any kind of short options, right? Because that means that there's a high probability it's going to expire worthless, right? We like deltas that are a lot higher than this, but that's this. It's you can work with it. Anyways, this is all about probability of the trade closing in the money. Now these are these are subject to change, right? These are only a mathematical way of determining what things could do. Everything's subject to change. But basically, this is telling me if we were to look at, say, just this potential one or this one, this is basically saying if there's a zero delta, it's basically saying there's a 100% probability it's going to end up out of the money. And that's a good thing when we're trading verticals. So, gosh, I almost did that. So this might be something that we trade, but what I really brought this up, another one I want to bring up was something that I suggested that we look at a bull put spread on. And this trade is going very well. There it is, IIPR. We are 65% up right now. We still have 25 days on this trade. We bought the 130 puts and sold the 135 puts. Let's go ahead and take a look at it real quick. So we're trading up above it fairly well right now, but we still have 25 days to go. And this pattern right here could go both ways. Tony is in here. Tony, you were my wizard on the patterns last week. What is this? And if anybody else can answer it, you get a prize. Antoine, I will answer your question in just a moment. And David, I will bring up BLNK. Tony's not paying attention. All right, fine, Tony. So somebody else. Did everybody get a chance to look at that little diagram that I sent? It's in the diagram. This is a symmetrical triangle or a wedge. And that means that this thing can do one of two things. When we get a breakout on either side, we can project this thing to go roughly 15 15 points. So whether we get it to break down here or break up there, right, we can expect a decent move. I wouldn't necessarily look to short this, just like I've always mentioned you guys, and expect it to hit the $15. But if it breaks here, huge probability that it's going to come back down to the support level. Okay. Anyways, the 135, that's what I was expecting. I wanted this to stay above those strike prices. It's doing everything I wanted to do. We still have 25 days on this. If I wanted to, if I was thinking, you know what, just as a hypothetical, if this were to break out here, that would not be good for my trade. So if it gets any closer to this area and maybe does start to spike out, depending on how much I'll be up at the time, I might decide to close this early. Okay. But anyways, it's doing well. So I'm loving that one. Let's go to this chart real quick, and then I'll talk about, and then I'll say what a vertical is. What was it? B, L, and K. Woo! There you go. Now that's a rally. I think I saw someone talking about this. What is... Okay, so look at the options on this, David. There's no volume there. You see that? What I mean by that is we've got nothing, right? So this is not a stock that we would want to touch unless you knew for a fact that this was going to happen when we broke out of this, right? If I were looking at this, and this is for everybody, if I were looking at this just as a regular chart, I would say that we have a probability of a $5 move on the max. This to go from $10 to 33, that's crazy. So, this, I mean, if you picked up the shares, awesome, that's fantastic. But since there's just no optional opportunities on it, you know, there's nothing we can really do with it, right? But David, I hope you picked up some shares. I hope that's why you were bringing that up, because that was a good move. Now, going back to this, Tuan, a vertical spread. Let's go to an actual stock that we're going to do. A vertical spread is taking two different strikes and trading them at the same time. Okay. So for example, this is an actual trade that we're looking at doing. I want to sell a call and buy a put for the sole purpose of BAC. I want to sell a call and buy a put for the sole purpose of making some premium if it stays above my my strike price of my short, and if it doesn't, owning the stock if I like the stock, which I do, and then selling some calls on it. So the reason that we like the bull put spread, the reason that we like this strategy is because we have huge high probabilities, of being right, and in terms of options, you gotta want to be as right as you can, with maybe not big payouts, but I'd rather be right and get paid than be wrong and lose money, right? And these are the strategies that have high probabilities of being of playing out in our favor. So basically what I'm looking at here, and this is what a short vertical is I want this to, if I'm going to sell this, I'm going to sell the 25, 50 strike. Okay. I'm going to sell that put, and I'm going to buy back the 25 put, okay? All right. So the purpose of this is if it stays above 25.50, we're going to make the premium on that. And if it comes back down, we'll close this out with a small loss, own it at 25, which sounds great to me. And then, you know, then we'll own the stock, and then we could start shorting against it, right? With some calls. But anyways, the whole reason I like this is we can be right in two different ways. So anyways, that's what a vertical is. And what we were looking at is a short vertical is buying and selling two different strikes at the same time. Now iron condors, that's a whole different thing. Oh wait, did anybody even ask that? I think I was looking at that strategy earlier. That's a whole nother thing we'll talk about another time. We're coming up to our top of the hour. So we talked a lot about retail stocks, airline stocks, a little bit about energy sector, banking stocks. So there's a lot of things to do here. Let's quickly bring up some of the currency pairs that I told you to keep your eye on and see what they're doing. So this support and resistance area. Now, Tuan, I know you haven't joined us for this, so if you're not familiar with forex trading, this is going to be a crash course to this. But everybody will understand the principles of what I'm going to talk about. This area right here is breaking out. On a short-term basis, we have an opportunity. On the longer-term basis, we have an opportunity. Short-term, this has already started to make its move. It's trading back above our 50 moving average, okay? And let's go ahead and bring up our Forex template, which is the pivot points, right? So we don't have any pivot points except for back here that are in dire need of hitting, right? So so we still have the overall looming area of support here that price will probably want to come back and touch. But if we get a breakout here, up here, if we get a breakout, we're going to be looking at 25, okay, to 26.50. All right, so that would be a 150 pip move that we're looking to bank on. So I want everybody to make this area right here an alert. I've got my alert set on this. If we start seeing this thing keep moving up to it, we'll want it to do that casually, right? Like this. If this thing shoots up to it, our trade might be dead because we don't want to start buying anything when after price has exhausted itself by trying to get up to there, right? So put your alerts here. I sent out a message about that TradingView is having huge Black Friday sale. If you don't have alert capabilities, just buy it, you guys. It's cheap, and you can set alerts so it'll go to your phone through an SMS text message, all kinds of stuff, and then you'll be alerted. I actually literally just got a message. So this is one. Here's one that's even closer to action. The pound yen, okay? This area right here is going to be breaking. So I'm going to be posting specifics. I'll be watching and how I'm going to trade this. This is going to be a big opportunity because the pound yen moves huge. Look at this short movement in 2 days. In 2 days, it went up 450 pips, or remember, 1 pip equals $1, $450 in 3 days. That's it, 3 days, right? So when this thing breaks, we could see this thing move very quickly. As you can see right here, it went down 830 pips in a matter of 22 days, right? That's big. So this thing, once it breaks out, it could do one of these numbers, a breakout and consolidate, which we may make a trade on. But again, keep your eyes open. I'll be looking for this. I will be sending out alerts on this. If you don't have your, I know I keep saying this all the time, but I just want to make sure that you guys are on top of this. I don't want you to miss out. If you don't have a land installed, install it. Get it funded. This is going to make its moves faster than you think. This week could be big moves. So if you need help on that, please text me, send me messages. I want to make sure that you guys get on top of this. Tuan, how do you determine your expiration on your option contract? Let's using Bank of America as an example. Anytime I'm doing a vertical, there's two underlining key rules for you to memorize, and everybody needs to memorize this. When I'm long, what am I doing here? There's the option chain. When I'm long options, time is not my friend. It is against me. When I'm short options, time is my friend. It is very much in favor of me. So that being said, I might look at 18 days to 31 days, but definitely no more than 30 days because I don't want to give it that much time. But December 24th is probably something we'll be looking at. We can also look at the December 11th. That's a little short, but it's something we can look at as well. The spreads on this, like I mentioned before, they're not great, but still opportunity. So that's what I'm looking at. I'm looking at anywhere between, 20, 30 days when I'm looking at a strategy like that. Okay, so you guys, we got our setups here. We've got lots and lots of things to keep our eyes on. Set your alerts. Be active in the chat because I'll be sending out trades when they come. So I want to make sure that you guys are on top of that. And I'm going to go ahead and stop the recording.